Hello guys, in this episode, we'll be looking at candle range theory versus power tree concept. These are one of the powerful concepts you can use to trade the forex market profitably. Now, I will be sharing with you the similarities of candle range theory and then the differences of candle range theory and how that you can use the two concepts at the same time and you'll be successful with it. Now, candle range theory is a three candlestick formation where you have the first candle in time of bearish condition being taken out, the high of the first candle being taken out, and price closing below the high of the first candle. A break below the low of the second candle signifies a market structure shift and price is ready to move in a different direction or to reverses. Now, this condition here shows that the buyers push price above this high and then the sellers rejected the price, which shows a sign of rejection in the market and showing willingness that the sellers may likely take control because the buyers might have failed to break above this high, right? Breaking above this high or closing above this high will have given a different scenario where we'll see price want to continue in the same direction. This is a bullish condition where price take out the low of the first candle and then come back to close above the low of the first candle. A break above the high of the second candle signifies a market structure shift and price will be ready to move in different direction. Power tree concept is a trading method by ICT where you have price consolidation and then the manipulation of price and then distribution of price in direction of the higher time frame, right? Now, the difference or the similarities, let's start with the similarities now. The similarities between the power tree concept and candle range theory is that both of them are based on sweep of liquidity above all high or above Asian range or above previous high, right? Now, in power tree concept, you have the Asian range and you have a sweep above the Asian range. Now into an opposing PD array in power tree concept, you want to see an opposing PD array so that you mark it. This will likely be a support or resistance to price. You also know where likely the price will stop the manipulation leg, right? So basically, they are based off liquidity, but the power tree concept and then the candle range theory, because you must have the first candle being taken out in form of the manipulation. This is the manipulation leg for candle range theory, while power tree concept, this is the manipulation leg for power tree concept, a break above the ancient range or ancient consolidation, or a break below the ancient range or ancient consolidation. Now, another example or another similarities between the candle range theory and power tree concept is that both of them can be used to trade price continuation and price reversal, right? Price reversal and price continuation. Both of them can be used to trade in such kind of condition. Now, here comes the differences between the candle range theory and power tree concept. Power tree concept is time dependent, while candle range theory is not time dependent. This is what I mean. In power tree concept, you want to see the ancient ranging, which is from 8 p.m. New York time to 12 a.m. New York time, and you want to see the manipulation leg between 12 a.m. New York time to 2 a.m. New York time, anything between the 2 a.m. New York time to 5 a.m. New York time, which is the London session. You would like to see a clear distribution of price, right? This simply means that if you did not see price accumulating during the Asian session, you may have a very low probability of trading power tree concept. Why? Because one of the conditions in which you will have to be looking for power tree concept is that the Asian range must show itself clearly in the market. This is just a three candle formation where it doesn't matter if the first candle has been consolidating or not, right? What you need is just a break above the previous high as a liquidity graph and then price closing below the high of the first candle, above the low of the first candle in this case. Now, another thing you should know is that the power tree concept and candle range theory, in some instances, you may see the candle range theory doing what seems to be like a power tree concept on a lower time frame. On a lower time frame, maybe if you see your candle range theory on 4 hour, on daily or weekly, if you go to your 15 minutes or 1 hour, you will see something like a power tree concept. You will see something like a power tree concept. Just like we know the similarities that they are both liquidity concept, right? Price taking out liquidity above or below a previous low. These are some of their features, but then they have their differences, which I've already stated. that time depending or time dependence is not necessary on candle range theory. So let's look at the chart. An example of power tree concept. You can see here the price has been consolidating. Price has been consolidating, and then this is where price started consolidation from 8 p.m. Eastern Standard Time or New York time down to 1 a.m. New York time, and price started retracing. Price retrace, this is the manipulation leg now. This is the manipulation leg now. Here is the manipulation leg. Price retrace until it took out this high, right? And then, you know, this side, this is an order block. This is the last candle that was raided by this big candle, right? By this big bearish candle. So we have a order block or a supply zone here, and then marking this high and the low of the supply zone gives what seems to be a fair value gap. Can you see how accurately it manipulated into the fair value gap? And right there we have price distribution from there. So accumulation, manipulation, and distribution, right? This is another example of power tree concept. Can you see from here, you know, price started from around it started from around 6 p.m. right, New York time. It was consolidating all through. Price was consolidating all through here, and then price, you can see price started consolidating from 6:15 New York time, and it consolidated all through here till 1 a.m. New York time, right? And then this is where price started manipulation. This is the manipulation leg of price. This is the manipulation leg of price. And you can see, I told you earlier that you can look for opposing PDI array. This is an order block. Price traded to 50% of the order block in form of manipulation and started distribution to the other side, right? So another thing I want us to know about the candle range theory and then the power tree concept is that both of them can be used together. You can look at candle range theory on a higher time frame, and then you use power tree concept as your confirmation for entering the trade. For example, if I say you see on the higher time frame, you might see this as a candle range theory. So, but then if you come to the lower time frame, you will see a clear power tree concept which you will use for your confirmation, and then making sure you mark the opposing PDI array and then wait for price to manipulate into the PDI array before taking your entry. Another thing is that inside the power tree concept, in the manipulation layer, you can use candle range theory to know when price has finished manipulation and then when price is ready to distribute in the direction of the higher time frame. This is what I mean. So we have this as a power tree concept, but how do we know that the manipulation level of price has come to an end and then price is ready to move in the distribution direction? Now you can see what happened here using candle range theory confirmation inside power tree concept. That is what we're using. Can you see how price took out the low of this candle? Price took out the low of this candle and then closed above the low of this candle, right? Let me mark it with a horizontal line. Can you see the low of this red or bearish candle? Price took out the low of the bearish candle and closed above the low of this bearish candle, right? This is a confirmation that the manipulation leg might have come to an end. And as soon as this happened, we can see that price never reached the highest low of this candle that took out liquidity below the bearish candle. So you can use your candle range theory to determine the extent of the manipulation of price in a power tree concept setup. So this is it, guys. I hope you find this insightful. And if you have any question or any topic you want me to take next, you can let me know in the comment section and I'll be happy to do that for you. So have a nice day and have a good trading day.